Bye. Hey everybody, how we doing? I've got some good news. Car prices are coming down. Actually, they've been coming down for a few months, but just a little bit. But the rate of decrease has slightly increased, if that makes any sense. The rate of decrease has increased, meaning the rate of decrease is quickening to the downside. All right. So thank you for joining in today. Quick channel update. For those that were asking questions about why I don't show more charts, why I'm showing my face now more, there is a reason, and it's not because I like to show my face. In fact, I never used to show my face. I have a face for radio, so why would I want to show my face? There's a reason. We'll talk about that at the end. Car prices coming down. Recent Manheim Used Vehicle Index, and we'll try to put the charts up on here, is now down. Used vehicle prices, and I should make this clear, this is vehicles at auction. So where dealers go, many dealers go to auctions to buy vehicles, prices are coming down. They're now down 12.5% from the peak, which was back in January. So a little bit of relief there for those that waited to buy a car, hoping for lower prices. You have been rewarded a little bit. I think you'll be rewarded a lot more if you go ahead and wait. For the most recent month that we have data on, prices are down 4%. That's just from July to August, right? So the deceleration or decrease is getting bigger, right? So 4% month over month, let's say that happens for a few more months, we have another 12% maybe in just 3 months, and that means they'll be down over 20% from the peak. Now, prices went up big time, anywhere from 30 to 60%, depending on your area and depending on if you're talking about used cars or new cars. But this is good news. Deflation. Hooray, hooray, hooray. Everybody was worried about inflation, hyperinflation, shortages, chip shortages, supply chain disruptions, all that stuff. And now we're seeing deflation. Thank goodness. Hopefully, we continue to see deflation in gas prices, home prices, rents. Rents are still going up. That would be nice to see deflation there. Let's talk about some of the numbers though. Manheim Used Vehicle Index. Prices have now dropped for 4 months in a row. Now the price, the auction price, or what's called the wholesale price, where dealers go, the auctions, to get a lot of vehicles. They also get trade-ins, but a lot of them are auctions, and they're still up 8% from 1 year ago, but they were up a lot more. At one point, prices were up year over year over 50%, right? So this is a major change, a major shift in the used car market, kind of like we're seeing in the housing market. So good news, and let's hope it continues. Now, what I think is happening is dealers are finally starting to adjust their prices. More people are in big amounts of debt, so they're not able to get the big loans that they used to get approved for, right? Bigger debt, deeper debt. Also, interest rates have risen. That is a big part of it. So more debt, more people strapped financially, still high prices in other areas, high cost of living, and it's making people's savings get drained. Basically, savings has plunged to financial crisis levels. So the money that people have left over at the end of their paying their bills for the month, and the money they have in their accounts, their savings, has plunged to financial crisis levels. So there's a few different things kind of converging to create this car price decrease, right? Lower demand, more people have so much debt. Also, the chip shortage easing somewhat. That is a part of it. Now, what we should start to notice or begin to notice at dealerships is inventory will begin to increase. And we probably all saw the videos where people were filming car dealerships, and I even did a couple of them before I hurt my foot. I did a couple of them that showed how empty some of these dealers were. So hopefully we'll start to see more inventory come into these lots, lower prices, and I think that's good for everybody. If you were looking to trade in your vehicle, maybe a good strategy if you can go without a vehicle for a while would be trade in your vehicle now, or not trade in or sell, private party or trade in, and get the price now. If you think the prices are going to continue to drop, get the price you can get for your vehicle now. Wait a few months. Of course, if you need the vehicle to get to work, don't do that. But if you can go without the vehicle for a while, maybe wait 6 to 12 months would be a good strategy to come in and buy lower at a later time. Not giving advice, but just something that I've heard chatter of people doing. All right, next, let's talk about the markets today. Dow Jones, all major indexes in the green. Wow. So who is buying these markets? Is it your average person, your average investor on Robinhood? No, I don't think so. It was only up by a little bit today, up 37 points. What is there to be bullish about in the stock market? Unless you think the Fed's going to reverse course, cut rates, start buying up more debt. So yes, further reductions in the Fed balance sheet. That is good. We're down to about $8.8 trillion from a high, which was just under 9 trillion. It was up to $8.965 trillion. So the Fed no longer buying everything under the sun. They're still buying, but they are shedding assets also, shedding more than they are buying. So they're reducing their balance sheet. And that means higher rates. We see the 10-year yield also up today. Let me just check that real quick here. Yes, up to 3.36. That was over a 1% increase. And that is more good news if you're looking for deflation in the housing market, if you're looking for the housing bubble to start deflating. You want to see that 10-year bond yield go up. That means they need to increase the rates to entice buyers. When the Fed backs away, the biggest buyer out there is the Fed. And now we see rates rise to entice investors to go ahead and buy this junk. A lot of it's just junk debt and corporate debt, securities, mortgage-backed securities, other types of debt. The debt market, also known as the debt market. So when the Fed steps away, rates rise. When rates rise, bigger chances of deflation. So let's hope this continues. Please let me know what you think about this. Car prices dropping 12%. Not much, but it's a start. And with the 4% drop that we saw in the previous month, we could start seeing some bigger declines and some deals coming for cars and trucks and SUVs and vans, etc. Now, channel update. To answer the question, multiple people ask me why I don't show charts as much as I used to. I used to show nothing but charts and data and videos, never show my face. Ended up getting a copyright strike. So I don't want to get my channel, taken away. So now I'm just going to do more of this type of stuff. I might show a chart here and there, but more me. Sorry, you have to look at me. I know I've got a face for radio, but more me, less charts. And that's why I try to get, things looking a little better around here. So hope that answers your question. Thanks everybody for being here. Big love. Keep stacking. Stay safe. Bye for now. Peace. Bye.